I digress. Shall we get back to what moved the markets? And to do so, let's welcome into the program Martin Crabb. He is CIO at Shaw & Partners, and he joins us, as he does every week, here in our studios at Barangaroo. How are you doing today?
Yeah, good to be here.
Yeah, good. It was a positive day, but I suppose a lot of the focus has been this watching and waiting to see if we'll see a return of selling when it comes to US tech. What do you think?
Yeah, well, we had a pretty bad sell-off on last week, didn't we? And then the Nasdaq had that big sort of recovery after opening down on its lows on the open. So, you know, hopefully, I think the mini futures are pointing to a small gain. They certainly were when I last looked. So maybe we'll get slightly better performance after that sell-off that we had last week. We're hoping so anyway.
Martin, last week I wrote a note about cyclicals and the potential for a vaccine to go and spark a bit of a rally in that space. Now, I believe you've been doing a bit of a look at this as well, potentially with so many phase 3 trials underway for a vaccine.
Yeah.
What is your favourite sector and why?
Yeah, so the way we try to think about this, David, is as a tail risk hedge, if you like. So we're probably just going to continue to muddle through, and governments will come up with different ways to try and manage the virus in different countries. But the thing in the background is the vaccine. So if there is a vaccine that's efficacious, gets approved and can get rolled out quickly, then we move back to normal a lot quicker. So we've just got a chart here that my colleagues at EFG in London put together. It's from the World Health Organization, and they're tracking all the vaccines. There's a couple of media outlets doing this as well. But there's currently 9 vaccines in phase 3 trials. So that's the final stage where they're really doing it in large numbers of people. So I think the Moderna one is a little bit earlier on, but the AstraZeneca one is with 30,000 people. That was done in July.
And that's the one that the Australian government says that they've looked to ensure that we've got supply of that here in Australia.
Yeah. So CSL down in Melbourne have some significant manufacturing capability. So they've said, why don't you start manufacturing that vaccine, even though it's not approved?
Right.
So when it is approved, we don't have to wait around too long for it.
And that's helped CSL in the past couple of days as well.
Yeah. So the Moderna drug, the AstraZeneca drug, and a couple of other drugs have got billions of dollars of orders from governments. So the US has ordered almost $3 billion worth of vaccine from 2 different companies. The Chinese and the Russians have already rolled one out, so they're not even waiting for phase 3 trials, so good luck with that.
Yeah, that's fine. Let them go their own way.
Yeah, exactly. So Western governments are a little bit more cautious. So we're hoping that, you know, there could be as a vaccine as early as next year, which would be fantastic. What that does is create a tail risk for portfolios, David. So if you're not fully exposed, you're going to get caught out. The market's going to run away like it has with tech. So how do you insure against that? So you've got to buy something that's going to do really, really well. So people have been buying real estate, people have been buying banks, but the real area is travel. So Webjet, I think, is up 7% today. So you're going to see more of this institutions hedging themselves with Qantas, Sydney Airport, Webjet, Flight Centre. Now we think Sydney Airport's interesting, A, because it's a quality asset, quality long-term asset you want to own in your portfolio. But they've done a big capital raising, which was undersubscribed from a retail perspective. Even though it was $1 in the money, 58 million shares weren't taken up by retail investors. Either they didn't have the money or they just weren't confident enough to buy an airport. So that was overhanging the market. That got cleared last night. So that stock's now out of the way. So as a travel stock, that should do quite well as a tail risk hedge.
That's interesting. I was speaking with a gentleman earlier today who said that Sydney Airport would maybe be one of his least favoured in the space because it could take longer for international travel, particularly to and from China, to come through, whereas Qantas, as soon as we get these state borders open, and there's such a demand for domestic travel, and domestic made, I think, 80% of their business prior, that Qantas was sort of a quicker, perhaps, way to play this travel reopening thematic.
Yeah, I think that's fair. Qantas has probably recovered a little bit further from its lows as well. They're both relying on global travel. Sydney, Melbourne's I think the 3rd most populous route in the world in terms of corporate travel. So I think Sydney is exposed to an opening of the domestic, but you're right. I mean, the sharper ends are really the travel agents, right? But there's a lot of risk built into them. I mean, I think Flight Centre is saying they've got $40 million a month of cash outflow. So if you're wrong on the vaccine, they could be coming back to the market at some point. Whereas I think Sydney and probably to a lesser extent Qantas, the balance sheet's in better shape. So I think it's more of a risk return thing, but I think Sydney's a reasonably good bet.
So just because you raised the Sydney-Melbourne route for corporate travel in particular, I'm curious, do you think that you guys and gals at Shaw & Partners will be travelling, business travel, like you did before?
Nowhere near as much, I think. I mean, just anecdotally, I would head down to Melbourne to see our institutional clients, you know, a couple of times a year and spend a couple of days walking up and down Collins Street. And we've all got so used to using Zoom now, it's just so easy to use, or WebEx, or these other video conferencing things that I don't think the clients are going to want to see you, even though they want to listen to you. So do you really need to be there in the flesh? So I think for new clients or new relationships that you're trying to build, face-to-face is incredibly important for that. But if you actually know someone and you're just updating them, which is a lot of what our industry does, then I think getting on the plane is probably going to be out for a while.
Yeah, sorry, I digress, but I do think it's interesting, especially, we do our little,
you can digress at any time.
Gauging who's walking around the city, et cetera, et cetera. Can I just, talk about this thematic of reopening a little bit further? So do you like the casinos then, the Star Cities, the Crowns, the Sky Cities, just because we could see that part of the market coming back to life?
Yeah, I mean, Crown's an interesting one. We've held that in portfolios before because I don't think the market appreciates how good this Barangaroo casino is going to be when it's finished. I mean, I go down there quite a bit and watch it as it come out of the ground. It's going to be a fantastic resort, and it's not in the price. The flip side to that is it's going to take a long time for that Asian high roller market to recover to anywhere it was. So Macau's just reopening, Vegas is reopening. So Crown competes in that market, which is really, really tough. So I think that company's going to be troubled for a while. I think the Tabcorp is more of a grind market. I'm not really excited about that. But we've looked at all those stocks. We've looked at real estate. We've looked at casinos. We still think travel is the better one.
Well, it looks at, I think, maybe the penthouses at the top of the tower are just getting completed right now. It almost looks like it's done. Martin, I've got to get your views on retail. Now, discretionary retail in particular, we're talking about trend changes. We're talking about Zoom before. A lot of people are starting to go and think, well, the online pivot is really benefiting a lot of those retailers that moved to that space prior to the pandemic. What are your views on the space?
Yeah, look, there's obviously been a massive shift to online. I think 25% of sales on credit cards are online now. So you can look at the ABS data, but it's always so old, right? So we've got the ABS data for July showed retail sales were quite strong, but some of the banks publish their credit card data, and you can see that on a sort of bi-weekly basis, and you can see not just how much they're spending, but what they're spending on. So, I think there's a massive shift to online. It's accelerated through COVID. Not all of it's going to stay there. There's going to be a little bit of a move back. So you will see a shift back to bricks and mortar as malls and shops reopen, but it's not going to go back to where it was. So I think the classic bricks and mortar versus online argument was always going to be won by online, but this is accelerated, I think. And
poor Myer. Caught in the middle of it, not here, not there, although it's becoming an Amazon drop-off point. I mean,
right.
We're going to be hearing from Myer this week.
Yeah, they report on Thursday, I think.
It's Thursday.
Yeah, so this is a company that's got almost $1.8 billion of sales. It's not a small company, but it's going to make about $10 million of profit, right? So it's kind of like, is it worth it? Is it worth all the hassle? So they've been struggling with people leaving their store, because remember Myer went from being a sort of department store where they sold all the goods to having stores within stores. They went down that model probably 20 years ago. Now a lot of those people are moving out. So they used to have, I think, Country Road, they used to have Apple, they used to have all these stores in their stores, but they're all getting out because it's just easier for them to either not do retail at all, or if they are going to do it by themselves. So they're fighting that trend as well. And also their stores are rolled and tired, so they have to keep spending money on refreshing them. David Jones is going through that at the moment. So, I mean, the market cap of Myer's down to 200 million, so it's becoming almost a microcap, and it's being booted out of the index.
Yeah.
This is one of Australia's iconic businesses, and obviously the shutdown in Victoria, they're a Victorian biased company. Nothing's going right for those guys at the moment.
Let's keep on the retail theme. I know Sigma is a company that's yet to report as well. I think it's reporting this week. It's linked to the retail space. Obviously, pharma is the speciality.
Yeah.
Anything in there? Any insights you can give?
That's another company with a massive amount of revenue. So they're going to report a half-yearly result. I think they're a January balance on Thursday, and about $1.5 billion in sales, and again, $8 or $9 million of profit. So it's really tough being a distributor of chemical products, so pharmacy products. So they had a big blue with Chemist Warehouse about a year ago, and Chemist Warehouse famously kicked them out. They've now subsequently renegotiated a different deal, but that hasn't kicked in yet. So when they lost Chemist Warehouse, they went on this huge cost-cutting drive. They have to, right? So they called it Project something, I can't remember the name of it, to take $100 million out of their cost structure. Now that they've got Chemist Warehouse back, they probably can't do that. So they're in between a rock and a hard place. And they had a big drop in revenue and had to cut their costs, or they're getting the revenue back and they need to add the cost back in. So I think it's going to be quite tricky for those guys given how fine their margins are.
Yeah, we caught up with Sigma Pharma few weeks ago, probably about a month
Was it
ago
Project
now.
Pivot? I'm just trying
Yes,
to...
it is.
Yeah,
Good memory. But they're also selling off those distribution centres.
Yeah, they flogged those a couple of months ago. Yeah.
Which, I guess that's a trend as well that we see, the sale and then the lease back, not just in that space, but really right across the board.
Yeah.
Which is an interesting trend considering all that's happening now when it comes to retail REITs and office REITs as well.
Yeah, so from a company like Sigma who want to get their balance sheet in order, selling off a low yielding asset like that's a good deal for them.
Mm-hmm.
For retail investors who are starving for yield, I think you mentioned earlier today that Atlas Arteria raised money for 20 basis points, 8-year debt, 20 basis point yield. So for the yield hungry investors, a distribution centre tied to a company like Sigma is a good investment. So there's a bit of that arbitrage going on. I think you're going to see more of that.
Okay. So we're post-reporting season, ahead of AGM season. That's going to be interesting as well.
Yeah, well, what we've noticed in reporting season is a lack of guidance. So we kind of knew going into reporting season that we weren't going to let a lot of companies come out with guidance. So typically what happens is that the profit result comes out, they might talk a little bit about July, and if you're into August, they'll talk about that. And then you wait for the AGM and you get really the outlook for the second half of the year. That's what typically happens. That's not going to happen. Reporting season didn't provide us with a lot of clarity about, because no one knows, right? When are we going to reopen? How are we going to reopen? Are customers going to come back? Are they going to go back to the malls? Are they going to start flying again? These things are still unknown. Even experts don't know. So I think chairman will be under, or chairpersons will be under a bit of pressure to come up with some guidance, but it'll be very difficult for them to do.
Yeah, they seem to sort of put us off and say, well, we'll be providing more detail at the AGM. And I think you can say chairman these days.
And you can still get away with that.
Yeah, for sure. Look, we could sit and talk all day. However, we're getting the big wrap in our ear. Thanks for joining us. We really appreciate it, as always.
That's fun.